margin or tax deferred, brilliant structure. I mean, he's a genius, but he's not a genius for what people think. He bought Apple. Question that the resistance to a spot ETF is going to continue for a while. And everybody's like, oh, on July 7th, GBTC is going to get approved. I'm like, I don't think so. Look, my prediction actually is the first one that does get approved is going to be BlackRock's because they're part of the cabal. But look, approving a futures ETF, and you can go back to approval of the creation of the futures the first time, December 18th, 2017, was the dead top, right? And there's a reason for that, is when you can create something out of thin air, whether it's money, right, like my shirt, or whether it is a barrel of oil, a brick of gold, or a Bitcoin, that creates a problem with supply. In the old days, if I want to sell you a barrel of oil, I actually had to have a barrel of oil that I controlled. I couldn't just say, oh, well, I'm going to make a paper barrel of oil and sell it to you. And as long as we settle up before I have to deliver it, I'm all good. So if you look at oil prices, they're super volatile, particularly when they spike because people just keep issuing new paper barrels of oil. And then you're prone to a period of speculators coming in and pushing the price down through shorting. And I think that's exactly what's happening in Bitcoin right now. And look, we talked about it says it's Gandhi, but the Gandhi quote, first they ignore you, then they laugh at you, then they fight you, then you win. And 2009 to 15 was first they ignore you. Nerds, geeks, who cares? It's nothing. It's a science project. Then they laugh at you. So 16 to 21, look at those nerds and geeks and the magic internet money, ha ha ha. Well now, 2022 to 2027 probably, is then they fight you. And the fight, it's gonna be a bitch. And it's not going to be fun. And everyone's like, well, no, I mean, they're gonna rally around it. No, they're not. The banks are being disrupted. And that's good, right? I mean, innovation and technological disruption is a positive for society. We're going to take $7 trillion of waste that exists in the traditional financial markets and liberate that, which is good. But the people that collect that $7 trillion don't want that to happen. So, look, BlockFi. We invested in BlockFi, and they got fined $100 million. For what? Oh, well, you sold unregistered securities. But you said these weren't securities. So how could I sell an unregistered security? Well, you're paying interest on stablecoins. Right, but those aren't securities. So, but you pay the fine. It's a cost of doing business. Now, the cool part of that is once they now have a regulated product, because everyone's like, well, don't file a regulated product because then you give them control. No. Regulation is good. More regulation is good. More boundaries, more rules is good. I would say it's like raising kids. If you give your kids no rules, they will be terrors, right? They need boundaries. They want boundaries. They want to know, oh, my parents have my back if I come up to this point. So it's a long way of saying, I think we're in this then they fight you stage. I think it's going to be hard, but you got to zoom out. Just like people say, oh, look at the correlations. Everything's highly correlated. Like,
for now.
No, but I recorded and look, I love Will. I really do, Will Clement. And I did a podcast with him yesterday. And he's like, look, the weekly correlation, meaning. And this idea that everything correlates to one in a crisis, right? Stocks and bonds, they're only 30% correlated, except they're both going down right now. Well, wait a second, that's not supposed to happen. Well, right, because what happens when stocks are being liquidated, as they are, hard, and there's lots of leverage, you get a margin call, you don't get to sell what you want to sell. You have to sell what you can sell. Gold, bonds, Bitcoin, and
especially at 1 a.m.
Especially at 1 a.m. Exactly. And it's just it's a really funny thing that people for some reason don't look at that and don't understand it. And look, there are those that do get it. And if you go back to March of 2020, Bitcoin fell 50% in like 12 hours or whatever it was. And I'm off a little bit, but it hit 50 something, 5,200. And people are like, oh, it's going to zero. I'm like, no, this is a big buying opportunity. And you've heard me say this, right? Investing, only business I know. When things go on sale, people run out of the store. When you put anything on sale, put wedding dresses on sale, people will, like that, exactly. People will run over each other to get in the store to buy the stuff. But when stuff goes on sale in the markets, ooh, I'm out. And the further the price goes down, the faster they run away. No, it doesn't make any sense. And I'm a big believer that the first loss is the best loss. People say, well, that doesn't make sense. You're saying buy things that go down. I'm like, no. First loss is the best loss if you bought something because you don't understand it. And if you bought it because the price is going up, then you better sell it soon. If you bought it because you think the price is below the value, then you should definitely buy more. And that's a very big difference between an investor and a trader / speculator, or worse, gambler. And that's, I think, the problem we have right now is we're still getting rid of the gamblers. The lockdown, give people free money, lever up, and actually get them to lever up so they can seize the collateral. Like, oh shit, that could be real, right? And again, I'm not accusing anybody of anything,
right?
But that definitely could be a business model. And so my advice there is some leverage is fine, but on assets that make sense. Like Warren Buffett, everyone thinks he's this grandpa stock picker. No, he's not. He is not a stock picker. He is a levered, margin or tax-deferred, brilliant structure. I mean, he is a genius, but he's not a genius for what people think. He bought Apple. Why did he buy Apple? Not because it was in its high growth phase. He bought it because it paid a nice dividend and bought back shares. So he takes that low volatility cash flow and levers it up with negative cost of capital money because he has an insurance company. It's a genius strategy. But an 80 vol asset, you can't lever that very much. It's like your house, right? People lever 4 to 1. No problem. Because you don't price your house every day.
Matt?
We're all guilty of looking at the price.
God,
I mean, we're all guilty of it. And to your point, if you're buying an asset truly for a long duration, it's a trust for the kids or it's to fund retirement or whatever it is, you actually shouldn't look at the price.
Never.
Unless you're looking at it to say, okay, the price fell below my estimate of value, so I'll buy more. But a better way to do that is just pick a period. I say this all the time.
Just dollar cost average.
Just dollar cost average over time. And, it's funny, I did the thing, and whatever, 2017 or 18, and it was on CNBC. And while I was on the show, the price went from 10,000 to 8,000. Like literally in the 6 minutes I was on the show. And Melissa Lee says, what should I do? I'm like, buy it. And just the look of incredulity. And she said, well, you just say that no matter what the price, even if it went to 5,000. I'm like, yep, I would. Buy it today, buy it tomorrow, buy it next week, buy it. Don't buy it all at once. There's no question that there are regulators that are being influenced, paid to do exactly that. Right? No question that is the case. But the difference is in the old world of innovation, where it was pretty localized. Each jurisdiction had their set of rules and regulations because nation states mattered, borders mattered. That changes in crypto because now nation states are not quite as important. Borders don't really exist. I mean, what is the border of the metaverse? And if you think about, take China. China says, I'm going to ban exchanges, 2017. Price of Bitcoin falls 40% almost overnight, and everybody freaks out. And what happened? Those exchanges picked up and moved to Japan and South Korea. And within weeks, the hash rate's right back the same. Same thing with Bitcoin mining last year. We're going to ban miners. What did they do? They picked up, moved here to Texas, moved to Kazakhstan. I met a guy down in Miami who was one of the Kazakhs who built this giant mining facility with all the people that came out of China. And it turns out some of them stayed in China. If the recent data shows that they're actually still doing mining in China. And we freak out about this idea that regulators are going to, but the thing is, if you over-regulate, if you try to put it in a cage, what's going to happen is like squeezing a balloon. The air is just going to go somewhere else. And part of it is American exceptionalism. I joke that Americans are like Notre Dame football fans. I'm a Notre Dame guy. They remember a past that never was.
The perception of exceptionalism.
Yeah, no. But they remember a past that never was. Like, if you ask a Notre Dame football fan, they think, oh, we win the championship every year. Like, we haven't won since 1988. And my father-in-law, who I love, right, says, well, in my time, we won all the time. I'm like, well, yeah, because in the 40s, the coach went to Europe and got all the guys from Army and Navy to come back as 28-year-olds. And they had a semi-pro team for 4 years. And they went undefeated for 4 years, won national championships. Fine, but you don't get to do that anymore. I always joke, except BYU. Yeah. You know, they send them on the mission and then they come back bigger, stronger. So this idea that regulators here are going to set the rules is crazy. Because if you make the barriers or the boundaries too small, it will just push innovation outside. And what I do like is under Jay Clayton, the SEC was measured, prudent, consistent. Like, those are not words that people today would use. Current head, not as much, but you do have people, like even the executive order, it's actually pretty good. Let's study this.
Totally reasonable.
Let's figure it out, and let's combine. And then, you know, you got Senator Lummis and others that are really smart about this. But ultimately, we're going to choose as a country. We're going to choose whether we want to be in favor of innovation and wealth creation or we want to be against it. Now, our track record on it is not actually very good. Right? Taxation is a good example. Right? Why would you ever tax innovation and wealth creation? Why would you tax income? It makes absolutely no sense. I mean, it just makes no sense. And it was supposed to be temporary, you know, for the War of 1812 or whatever it was, Spanish-American War. But it's not temporary. What we should tax is consumption, because you should let people make as much money as they want and create as many jobs as they want. And then when they choose to consume, you want to buy an expensive watch, pay a lot of tax.
You want a yacht.
Pay a high tax. And you can choose. And then it's totally progressive. But I don't know, that's a problem for it. Ultimately, I look at this innovation cycle is so profound. Look around us, right? You're sitting here, like I say, your mind being blown every half hour, except with this one, present company excluded. And it's because the talent migration into this space, it's like nothing the world has ever seen, right? People from all walks of life, from technology, from finance, from politics, from societal focused companies, all seeing that this movement can truly change the world. And it's everything from how we think about ownership, like DAOs versus corporations and LLCs, to how we think about ownership. I mean, I was a big investor, we were big investors in ride sharing. I used Lyft to come here and love it, right? Made lots of money. Uber, Lyft, okay? But every time I get in one now, I think, why does the person who wrote code 10 years ago get 30%? How come it's not decentralized and owned by us, the users, and the drivers?
The drivers, of course.
And that will happen, but it hasn't happened yet. And if you think about all of the types of opportunities, well, have you heard the Crypto Boy song, the TikTok thing? Okay, you got to check this out. It's a young woman who did this. It's called an open verse challenge on TikTok, right? And she composed it. It's actually pretty catchy. It's like Skater Boy, but Crypto Boy. And they did a bunch of collaborations with people. And it's actually a pretty catchy tune. I like it. And the whole message of it is, I don't want to hear about your NFTs. I don't want to hear about crypto. I don't care about your crypto boy, not one Bitcoin, right? Fine. But here's the thing. I actually composed a challenge, or an open verse, that I was going to record. And my daughter's like, you are not recording on TikTok. You are not. Yeah. And I'm like, okay. So, but I still composed it. And basically I said, look, fine, you don't want to hear about my NFTs. But here's the thing. You just composed this song. And it is blowing up on TikTok. It is blowing up on Twitter. millions of clicks. Well, guess who's getting rich? ByteDance.
Yeah.
If you turned into an NFT, then you would get rich. And the Pussy Riot actually made an NFT with her. So now she does have a little bit of ownership, and it's all about ownership and royalties. And that is going to be such a monster thing that, think about Facebook, right? How did Zuck get rich? Stole the idea from the Winklevoss twins. Maybe. Depending on which side you believe. Allegedly. And created a free app. Well, if it's free, then you're the product. So, and then we, actually not me because I don't have Facebook, but everyone else puts their stuff out there. And they create content, and then he collects the data, sells it, and makes a lot of money. Like, well, wait a second. If I take a cool picture and I post it, how come I don't get the revenues? Well, that's going to happen. And whether it's our attention, like Best Buy. When I walk by a Best Buy store, my phone should light up. Mr. Yusko, we got all the stuff you've been looking at in the last week. It's 20% off today just for you. Come on in, we'll load it in your car. They don't have to spend 1 penny on advertising to me. I should get that money because I am addicted to Best Buy, I am addicted to electronics, and I'm going to shop there. And same thing with Coca-Cola, right? Pepsi should never spend 1 penny advertising to me because I don't like it and I'll never drink it, not ever. And so, but our attention